your tax situation is completely different than everybody else's situation. So we need to be able to design it to where we want to maximize your tax bracket based on your.
Hello and welcome to the Bar Business Podcast, where we help bar owners increase profits, attract loyal guests, and simplify operations so you can avoid burnout and finally enjoy your life outside of your bar. I'm your host, Chris Schneider, the Bar Business Coach. Before we get started, a quick thank you to our sponsors, Spot On, who provide a great modern POS solution for the bar and restaurant industry, and Starfish, who use AI to turn your books into actionable steps to increase profits. We spend a lot of time on this podcast talking about the financial well-being of bars, financial management for bars. Everybody that listens to this knows that's what I do for a living, is financial stuff for bars. But what we don't often get the chance to talk about is financial well-being for bar owners and bar teams. And so with that in mind, today we're being joined by Matt Ruttenberg to talk about 401ks and retirement planning for bar owners and their teams. Matt is the co-owner and director of business development of Life Inc. Retirement Services and has a wealth of knowledge on 401ks and everything retirement related that he is going to share with us today so that we can learn a little bit about not necessarily how to help our businesses, although some of this does when we'll talk some tax strategies and things, but also how to help ourselves in the process of owning a business. So Matt, thank you so much for being here.
Yeah, thanks, Chris, for having me on. I really appreciate it.
So to start us off, because I know when we start talking about retirement planning, it is complex, it is legalistic, it is confusing. A lot of bar owners, and I feel like a lot of small business owners, it's not unique to us in the restaurant and bar industry, but a lot of small business owners just try to avoid this because it's just confusing and they don't know what to make of it. There's so many options out there. Before we get into 401ks and some of this more complex stuff, could you give us like a 30,000 foot overview of what small business retirement planning even looks like and what it can be?
Yeah, absolutely. Which it's such a vast world. And a lot of times, business owners who are not in just general finance, or it's not just their focus is the business, bar owners, restaurant owners, things like that they're focused on their business. They know it inside and out. And then when you bring this topic in, it's just a whole nother world, and it's vast. You start Googling, you start searching on your own, confusion pops up quite a bit. So to really scale it down and explain it at the core level is when you're a business owner, you have these opportunities to create something for you, but also your employees. And the way the IRS looks at this is, as long as you have created something for your employees, the business owner can take advantage of a tax code that generally isn't available to your W-2 employees, which is the 401k side of it. The contribution levels that are much, much higher for a business owner than they are the employee for the most part, in the strategies. And this is just one code. 401k is one IRS code. There's so many out there, but being able to take care of this is generally one of the first things you should do. And when we get into like what types are out there, there's probably a dozen different kinds of plans out there, not to mention the strategies involved in each one. And my goal today is to explain which ones are what and which ones are, where do you start and what do you look at. At the same time, it is very complex. So getting into it is what we're going to do today.
Awesome. And so let's go ahead and start diving in there a little bit. So most people that are listening to this, for your context, and I know we've talked obviously before the show, and a little bit about who we're talking to, but I want to make sure the listeners realize that we've had that part of the conversation, right? We're talking people that own 1, 2, 3, 4, 5 bars or restaurants. So really kind of small businesses, right? We're looking neighborhood of $1 million to probably 10 million on most of these folks. Smaller groups, 10 million. The independents, you're 750 to $1.5 million in a lot of cases, 2, 3, 4 million if you have a busier store. So for folks like that, we're really not talking giant businesses by any means. When they go to look at retirement planning, I know they all get hit with IRAs first. And I know from talking to you, IRAs are not, they can be an option, but they're not a great option for a lot of small businesses for a number of reasons. So why do they get hit with IRAs first is an initial question. And then why is that not always the best option for them to take?
IRA versus 401k, IRAs are kind of, I guess the easy button is the best way to explain that. It's an easy turnkey option solution for a business owner in general, bar owners too. And it's easy. It's easy to implement. It's easy to get it going. There's not many options to it, right? There's the menu of what you can do with it is relatively small. And it really comes down to, what you're trying to do. And, is this for you? Is this for your employees? Which we'll get into that in a little bit. But if it's got the 3 letters IRA at the end of the plan, which would be simple IRA. If it's got those three letters at the end, it's easy. And it doesn't require administration. It just requires some organization and maybe some support on the bookkeeping side. If it's got 401k at the end of it, or we're talking pension plans, or we're talking profit sharing, it does require administration because there's a lot of regulation and compliance around it. At the same time, they're doing that because the opportunity is much more advantageous for the business owner. And what they're trying to do is they say, okay, as long as you take care of your employees, now, Mr. and Mrs. Business Owner, you can do whatever you want. You can max this out. You can get into 5-6 digits. And that's when we get into the 401ks and pensions. Those are more complex options. And the IRAs are the easy way to get going.
Okay, so for some people, IRAs may make sense. Now, I know one thing that we discussed when we talked before, and that I feel like a lot of small business owners have a fear of is, okay, I'm going to set up this retirement plan. And I believe this is one of those things where it's true of IRAs and not of 401ks necessarily. I'm going to set up this plan, and now I'm required to give all these people money for their retirement. And as a bar owner, right, we're in an industry where turnover of 100% in a year is not unusual for a lot of folks. So why I'm going to hire you and you're going to work for me for 2 months. And I'm going to give you this little retirement thing that now I'm kind of on the hook for worrying about in the future. And it just scares people off. A, is that true of IRAs, or is that just a misconception we have? And B, then how would 401ks be different than that?
Yeah, this is a really, really great question. And this is part of the questions that we have. And to kind of step back on that before I answer that, this is why talking to the business owner is so important. A lot of times we're going to talk to the office manager, the person who's even an employee. Sometimes those employees says, hey, I want to task you and get pricing and all this and figure it out. Everything is designed about what the business owner wants to do and what's the budget. So pricing is a very, very low level on the conversation route there. So IRAs are not great when you were talking about high turnover. And let me explain that a little bit further. So simple IRAs, which is I call that a junior 401k. Simple IRA is like a junior 401k. And the reason why we don't do that in an industry, there's a lot of turnover. So restaurants, bars, anything else that has kind of a high turnover rate, all you need to do to have someone who's eligible in those plans is pay them $5,000, which is not difficult to do. So if you're going to pay them $5,000, they're eligible. A SEP IRA is $750. So those are easy, saying, let's just give everybody everything. And when you need to get into more strategic design and eligibility requirements, that's why the K is such a much more advantageous route to make sure that you're protecting the cash flow, you're protecting the assets of the company, while you as the business owner can take care of it. And there's two questions that we ask everybody when we first start talking to us. One, why are you talking to us? What do you need this for? What's the purpose of this conversation? Is it for you? And it's honestly, this is pretty multiple choice. Is this for you, or is this for your employees? Or is it all the above? And if it's for you, we almost always go over to the 401k side. If it's just for the employees, and there's a lot of state mandates that are saying, hey, now that you have over 5 employees, you have to implement something, and this is why you're doing it, then sometimes we'll go the IRA route because that checks off the box for your state. But if it's for the owner, the next question we're going to say is, how much do you want to contribute, or how much can you? And maybe we go into some conversations about profits and things like that. But the more complex design on, okay, maybe we want to push off eligibility for a year. We can do that in a 401k. And then they have to be there for 1,000 hours a year. Great. Check that box off. Compensation that you pay them is not part of that conversation at all when you're in the 401k side. It very much is on the IRA side.
So it's a lot easier then to create a situation with a 401k where someone has to work for me for quite a while, has to actually put in real hours before I'm on the hook for anything regarding their retirement.
Yeah. And we haven't even mentioned vesting schedules too, which is how long do they have, even though you're giving them a match or you're giving them something, a contribution, how long do they need to be with me before they can walk out the door and take it with them? IRAs, 0. You give it to them day one, they leave, it's theirs. Okay, so we can stretch that out. Maybe 6 years, even as far as if we want to. So there's a lot more you can do to, again, protecting the assets, create that for your employees, and especially for the higher quality employees that you really want to hold on to, like the management or something like that. You want to hold on to them, then you want to create that incentive through the vesting. It's just one part of that equation.
And just a quick question on investing, because I had never thought about this from a business end before. So I have an employee, and I've been putting money in their 401k. It's vested, and then it's not vested. Rather, let's say the vesting period's 2 years, and they leave at a year and a half. Does that money just come right back to me? Does it stay in the 401k ecosystem? What happens with it?
Yeah, ecosystem. That's a great way to say it. It goes into something called a forfeiture account.
Mm-hmm.
And then you kind of hold on to it in there. By the end of the year, you say, okay, this is what I'm going to, you can reuse that money to give to your other employees or pay the fees or anything like that, profit sharing contributions, things like that. So it comes back in the form of almost like a credit to the plan.
Okay.
And then you can reuse that over and over again. You still got the deduction on the year that you gave it to them from a tax planning standpoint, but then you can just reuse it for future opportunities.
Interesting. So let's talk a little bit more, since you just mentioned tax planning. Let's dive in there a little bit, because I feel like that's when you and I have talked in the past, talking 401ks versus IRAs. 401ks give you some really interesting kind of tax options and things that make it a really good choice for a lot of these small business owners. So what makes a 401k? I mean, we've talked about some of it, but what else is going to make a 401k a better choice oftentimes for a small business owner?
It's that being able to be able to mold the design to your business, not everybody else's business. A lot of these turnkey options like the Simples, and there's a lot of turnkey 401k options out there too. I call them boilerplate versus custom. So it's kind of like, let's use TurboTax versus a CPA firm, or LegalZoom versus an actual attorney. Being able to mold the plan to your business is so much more important than what people realize. Taxes, from the tax standpoint, your tax situation is completely different than everybody else's situation. So we need to be able to design it to where we want to maximize your tax bracket based on your profits, right? A lot of times we'll have that profit conversation. Think of an upside down 3-tiered wedding cake. Okay, so now the smallest piece is on the bottom, and being able to layer different kinds of plans, we call it a retirement plan stack, is very, very important. But every layer is designed a very specific way to maximize the layer above it. So if we're talking to someone who has a $1 million profit, we're going to design it one way. If we're talking about someone who has a $100,000 profit, we're going to design it another way. And then the second question we have to ask is, how much do you want to contribute? And along with that profit conversation, we can say, we can get you into the 6 digits of contributions, save you 6 digits in tax planning. And that's one side of the equation. But the other side of it is, how much do you have to give your employees? Like, you're saving all these taxes, right? But what is the net? Are you in the black? You in the red? What is the net savings? Because maybe you saved $100,000 in tax savings because we built this great retirement plan stack for you. But if you had to give your employees $70,000, then maybe we don't want to go that route. We want to pivot a little bit and go a different route. But at the end of the day, the tax savings is pre-tax. Whatever the employer is giving to their employees, that's always pre-tax. And the employer has the opportunity to say, do I want to do pre-tax to where it takes it off my immediate bill? Or we can go like a Roth option where you pay your taxes now, but the entire balance in the future is completely tax-free. Or is it a little bit of both? And that's where that personalized custom design really comes into play.
Now, for owners, because on the Roth, if you have a Roth 401k, you still have that same income ceiling that you would with like a Roth IRA, right? Where over a certain amount of money? You do not.
You do not. No. We just finished up a design where they're putting in their max funding at $70,000 for 2025, all in the IRA based on a certain strategy and they have $1 million profit.
So does that mean that a Roth IRA that you kind of self-design as a business owner is basically one of the only ways to save post-tax money over that normal Roth IRA cutoff level?
So that gets into so the IRA, a Roth IRA does have those income limits like you were talking about. When you're doing it inside the 401k, there is no income limit. So you can contribute, you can make, like I said, multi-million dollars and still be able to get that Roth component. Now there's other types of vehicles that allow a Roth-like situation. This is where like the insurance kind of conversation gets into play, where it mimics, it's a tax code called 7702, mimics the Roth, very similar to it, but not quite exactly it. But that is the way to do it. And there's situations where we're talking some really high strategy stuff here, where we can build, if you've heard of the mega backdoor Roth conversion strategy, which I know you have, Chris, where you can get all your money into Roth. There's a version of that where you can get an ultra mega backdoor where you can get unlimited Roth in there too. But sometimes you contribute pre-tax and then you convert it later to Roth down the road when maybe you sold your business or sold your bar because you're like, now my income's lower. Now I'm going to do some conversions. Now we're getting into some high level stuff here. But again, the strategy, the vehicle's there. Those are easy. That's the 401k tax code. The amount of gray area that is available in that tax code is far beyond what most people realize.
And so because that gray area is so large, and we were getting into some high level stuff there, and hopefully everybody followed us, but I just had to ask the question because I'm the kind of person that I always have enjoyed Roth type stuff generally, because if I can pay the tax now, assuming I'm making more money down the road, it's going to save me a lot of money in the long run, right? And it just makes all that money tax free down the road. So I've always liked that. But we're talking about designing these 401k plans. And obviously, from what we've talked about so far, there are a lot of options. There's a lot of flexibility here. You just mentioned there's a lot of gray area you can play in. So what does that process look like, right? Like if I had a bar, I pick up the phone and I call you and I go, hey, Matt, I want a 401k plan. What does that whole design process kind of look like?
Yeah, that's a really good question. And this goes back to those two questions I mentioned earlier. So we have this first conversation with all sorts of business owners, several hundred per year. And they're coming at us with like, do I go IRA or 401k, profit sharing, defined benefit plan? And that whole menu of options that I said are so vast. It's how do we narrow this down? And there's those two questions. Step one is, what are you here? Why are we talking? What's the goal? And that is so important because that's going to narrow it down to maybe three of those. The second question is, now, how much do you want to contribute? And that can look at like, okay, this is my budget. This is, it could be none. The answer could be none. I like to invest in non-traditional assets like real estate or commercial development or other businesses. And that's part of the investment equation. The other question might be, or the other answer is as much as humanly possible because I have way so much profit that I just need tax support, please goodness. And that takes us down that path. And the next question, we get into eligibility. Like, okay, now let me tell me about your employee pool. Do you have a lot of turnover? If there is turnover, when is that time frame? Is it 6 months? Is it a year? Is it 2 years? And do you want to give them anything? You don't have to, but it's going to affect you. Like I said, the IRS says, if you do this, then you can take advantage of these higher level contributions. If you don't do this, then we're going to limit you on how much you can do. And that goes into the design process too. And it's just having that conversation of what are you trying to do with your business? And what are you trying to do with your money? And what are you trying to do with your taxes? And that's the process. And we create that design, we implement it. And then being able to evolve inside of this plan that you've implemented in year one is even more important. So we do a lot of open-ended stuff, design concepts, like what's the match? Is the profit sharing in there? And being able to pivot is really, really important because your business changes year to year, day to day. You might hire someone who's like, I need to get this person in the plan right now. And we need to, because this is the person who's going to help. It might be your successor to your business. It might be the person who's going to help you so you can go vacation to be that absentee owner that you've always wanted to do. So we need to take care of that person. And that might be a whole nother third layer on top of that retirement stack that we want to only target that person. And how do we target that person effectively, but also keep them a part of the company for as long as humanly possible? And that's a whole nother kind of plan that we would add on to that retirement plan stack. Lots to go into, but it's really just trying to figure out what your goal is of your business and what your future plans are. Do you want to expand? Are you happy the way things are and things like that? And how's your employee pool look? Very, very important to understand all that.
So you design a plan and then you can pivot it as you go along to adjust it for your business. So it's not like one of those things where you set up some legal framework on day one and I'm stuck with it for the rest of my life.
Yeah. So that kind of goes into, that gray area that I was saying earlier, and using LegalZoom versus an attorney, right? A lot of these companies that are plug and play, and a boilerplate is we've created this plan and fill in your name. Right? Fill in the blanks. And that's what you got. That's a boilerplate design. Those companies are not going to allow certain evolution inside the plan with what you're allowed to do and what you can't do, because they want to keep it at a very tight protocol processes inside of their business model versus doing the custom way is that's when you are able to. A lot of times it's easy. I'm at this point where I don't really want to give them anything. I don't want to save for myself because I'm still trying to grow this thing. Let's start with something easy and turnkey. That's totally fine. But then having that evolution to be able to pivot later and add those layers if you need to, that's where those custom models come in.
And so just because I know people are listening and I'm sure some of them are going, hey, this sounds great, but this is going to take a lot of my time and effort. What does the timeline look on getting something like this? Is it a 2-month process? Is it a 6-month process?
The official onboarding, once you hit go, is 45 to 60 days. We haven't really talked about deadlines or anything like that, but there's so many deadlines out there. Every layer of that upside down 3-tiered cake, there's a different deadline for each one of them. And it depends on how you file with your entity structure and things like that. So once you hit go, let's just say 45 to 60 days, we have to gather information from you as the business owner, of course. But I tell people, if you're looking for 2026, just pick up the phone and have a conversation and start looking into it. So you know those deadlines and you know when you have to do it. Because oftentimes, if you don't know that, you're going to miss. We find people who have missed 5 digits of something. Tax planning. They've missed 5 digits in taxes that they could have done because they filed their taxes too early. I had a conversation before this. Extensions are beautiful because then it gives us more time to create these things. But then there's also the opportunity of like, you gave your employees too much because that prototype or that boilerplate plan design didn't allow you to minimize these types of contributions and matching that you had to give to everybody. So we see 5 digits on both ends, taxes and too many contributions to the employees. And that's just having the conversation. Just having a conversation early is so vital to the conversation. Don't wait until 3 days before your filing deadline because your CPA told you that you should be doing this. That's when you're going to miss those deadlines.
So really, if you own a business and you're thinking, hey, I might want a 401k program for myself and my employees, but by the time this airs, it's going to be early May. That's the time to start.
Absolutely.
Isn't it? Give yourself 6, 7, 8 months in the year to get this set up before you get to the end of the year, before you hit those deadlines, so that you can have time to maximize and plan everything.
Yeah, in May, if you file an extension, we're still doing 2024 deductions.
Okay.
In May, we can still do 2024 deductions. You have up until the day you file I won't go too far into this because it's a little complex, but you have till the day you file, including extensions, to implement and contribute for the previous year for certain parts of that contribution allowance. Then for the current year, October 1st is a vital deadline. If you have that upside down 3-tiered wedding cake, that very bottom is the 401k, and a very specific type of 401k, which is called a safe harbor, has a October 1st deadline that you have to hit by. If you miss that, you're going to miss out on 5 digits of tax savings if you do that. So having the summertime is absolutely the time you should start the conversation at the very latest for the current year. But we also have some stuff for the previous years. Again, lots of deadlines, lots of different deadlines to play with.
Well, and as much as we could dig into them, and I would be right there nerding out with you on deadlines and why the government makes everything stupid and difficult. But I think the bottom line on all that is people just need to call you, right? Because you know them all.
Yes.
And you can tell people what should apply to them, because there's no way, I don't think as business owners, that you can keep all these different IRS and random government deadlines in your head and still have room to run your business.
Yeah. We want to be a part of the team that you have created, like your CPA team, your attorney team, and we should be all communicating. Everybody should be talking because it all connects. It's your team. It's just the conversations are important in finding someone you're comfortable with. Google's great, but at the same time, it's put together. There's a lot of information out there, but putting it all together under one where it makes sense for your business is really, really important.
So we are getting a little close to the end of our time for the day. With that, I know we've talked about a lot of stuff, but is there anything we have not hit on so far that you think is vitally important for people to know that you want to add to the conversation?
Yeah, and I probably should have said this in the beginning, but there's a lot of tax credits just for implementing a plan right now. A lot. And it has not been, you don't hear a lot about it, but if you start a plan now, you can get up to, depending on how many employees you have, I've seen 5 digits of tax credits very easily. So if you have 20 employees, you have the opportunity to get probably a little more than $20,000 in tax credits per year. and then
That's huge.
for up to 5 years. Huge. We're absolutely able to create net zero plans for the business owner. The tax credits cover the costs, and they're given $1,000 per employee to cover the match. So now is the time to do it. Now is absolutely the time to figure this out. Unfortunately, plans that were done prior to 2023, nope, those tax credits don't apply. It's for new plans, unfortunately. But yeah, that's a very, very important thing to add into it. So big part of the equation.
That would be a big part of the equation. And I'm sure that's made more people that have listened this far with us a little bit more interested in talking to you. So if they do want to talk to you and figure out how to save all those taxes and get a 401k, what is the best way for them to reach out to you and learn more?
Yeah, very simple. Just go to k.expert. That is a page where you can just get directly in touch with either myself or one of the other experts on our team. During the process, we will give you what your tax credits are going to be. That is part of our conversation, is to give you an idea of what those tax credits are going to be. You can pass those on to your CPA and say, does this make sense? And then we just run numbers. Let the numbers do the work. If you're in the black, great, let's do it. If you're in the red, don't do it. That's the way you make these kinds of decisions.
Well, fantastic. And for everybody listening, we'll go ahead and link those contacts for Matt and the website in our show notes. So you can just scroll down there, find ways to get a hold of him. With that, Matt, thank you so much for being here. This was a great conversation. Really enjoyed having you here.
Thanks, Chris. I had a lot of fun.
That about wraps it up for today. If you enjoyed today's insights, make sure you like, subscribe, and leave a review. If you are ready to take your bar to the next level, schedule a strategy session with me by clicking the link in the show notes below. Until next time, have a great day, and we will talk again later.